Hey everybody, welcome back. A ton to go over tonight. Start with the basics. 200-day moving average. We are back over. It's really hard to not be excited about this now. We're going to talk about the DTL, and I want to thank everyone for putting up with my mic yesterday. This one's better. But we are right against the first DTL. The actual number you want to look for tomorrow, especially you futures traders, you want to watch right in here. And you're going to watch 43.36. That's what you're going to want to pay attention to more than anything. Watch that 43.36 level and see how it goes. But you can see right in here this DTL. A lot of people are not paying attention to that. DTL is downward trend line. What we like to do with these is relatively simple. We want to clone them and then see if they fit anywhere. And you'll remember that one fits perfectly in there. So we were in the lower end of the channel. And we can see that lower end of the channel pretty clearly right here. And here's the higher end of the channel. Yay. So we have this channel and we can see how we've been respecting it over and over again. Now, are you going to come out of this? Eventually you're going to come out of this, but eventually it's not really going to help us for tomorrow. And for this video, we're going to really focus on tomorrow because there's a lot going on here, especially with Apple's earnings that we have to go over. So you have points of convergence here, or as I refer to them, a confluence. You have two of them right there. And you're going to have to pay attention to that. Now, I'm over the 22. I'm over the 12. I am not over the 55. Some people will use a 50, and that's okay. You should use what you're comfortable with. Now, if we drop that down, you can see right now it's negligible, all right? But just understand that this is a little bit of an area in here where you might have some issues. You got a lot going on in there, and you're going to have a bunch of people in here early October that are going to say no mas, and they're going to say just get me out and then I'll reevaluate, and that's fine. But we just have to be cognizant of where we are, and then we're going to have to make a decision on what we're going to do about it. I think the best thing for us to do is just study where we're at, and then we can talk about where we're supposed to go. Now, we should talk a little bit about Japan and their intervention and the threat of intervention with the yen, and just talk about the market a little bit, and we will. But overall, I want to save that for Saturday because that's really in depth. If you remember what we did on July 27th, 28th, in that period of time, we went over this in great detail. And one of the things that we were talking about in great detail was what to expect based upon this. Let's pull this down a little bit. Somehow it got wonky, probably with all the trading today. But what are we seeing here? What do we have to pay attention to? Well, we are grossly overbought here, guys. Grossly overbought. And this is a reading. I'm just going to drop it in here so you can see it. You're at a 92. You don't have 92s on here very often on the ES. So matter of fact, let me show you how rare it is. So this is going to go back to July from here. And what I'll do is I'll just grab it and I'll just drop it there. And you can see how rare it is to have something like that here. Now, what I would note when we have something like this, what is it really telling us? Well, it's telling us a couple things. Number one, it's telling us right in here that, yep, we might be toppy, but when we got here, all these times, after we consolidated for a period of time, what happened? Every time we hit here, we went higher. So it is an extreme reading. We're probably going to back off of that extreme reading. But then the other times that this happened, what did we do? We went higher. And I think that that's a very important distinction for us. I think that's something that we have to think about, something that we really have to pay attention to. So that's where my head is with it. It's very difficult to get very excited about being long here or adding to longs. Now, if we stop for a second and put this into a 4-hour, and you have to realize you're going into not quad witching, but I'm sorry, because quad witching's over, but November. For me, the biggest issue is this. When you're going into the end of the year and you have a Fed meeting like you do, it's almost going to be like quad witching tomorrow. Now, what does that mean? It means you have so many people that are going to be putting themselves in a position where they had options going into the Fed that it's going to be absolutely crazy. If you look at this level that you're at on overbought right now on ES, just look at this here. I'll drop it in so you can just see how crazy this level is. And now what we're going to do is we're going to mark these off so you can just take a look at what's happened when you're up here. Now, what we should be doing is talking about what happens when you roll when you're up here. But we're not going to get into all that. All we're going to do is just mark off these locations so you can see what's happened here when you're on a 4-hour. And we went back all the way to March 22. So you have a nice data set here. And you can see how we acted every time we hit this line on the 4 hours. And you can do what you want with this information. Right? I'm just giving you information. It's up to you to do what you want with it. Does this look like it's the best spot to buy? And the answer is no. Here's the rub. This can always go higher and then roll. So in other words, just because I'm here, right? So when this broke over this level, I was here and then we went up to there, and then we rolled down, and then we kept going. So you can catch something like this, right in here. Okay, you can catch something like that. The issue with it, we call it that. The issue with it is this. Let's get these all off now. I'm not sure which way we go and what happens. You are grossly net sold here, about as grossly net sold as you were right here in May. Couldn't we see something like that? I think you can. I think there's a couple things that we don't really have the wind at our back. So I would just say, hey, this is where we're at. We went from grossly oversold to overbought in a heartbeat. And we had massive, massive moves. And those massive moves had zero follow through today. And I think that we just have to call it what it is. We had zero follow through today. We had moves higher and everyone's all giddy about it. But did we really have massive follow through? No, we had a gap up and formed dojis on these names. This is not what we wanted to see. Even at the end of the day, and I'll show you something really interesting here in a moment, but and we need to be aware of this because this was really interesting. Anyway, we broke out here right around 2:30, which is a dentist's favorite time of day, and then we couldn't get over there, and then we pulled right back, right? We had swing trades on, day trades that we were going to turn into swing trades. We were going to pull a couple bucks out, and then we just got stopped out, break even on the rest, because if you were going to go, you were going to go. But I think there's an important distinction here. What did this move accomplish during the day? What was the motive of this? Okay, this was to get shorts to cover. What does that do? It creates liquidity. I'm not saying that you shouldn't have a maybe different bias because of what Japan's doing. I'm just saying that if you look at the day, there's NVIDIA on 5 minutes. You're wondering why you didn't have a great day today or your trading was off today. You're staring at it, right? This was pretty much the modus operandi across the day for trades. If you just take a look at it, look at here and just watch this 9:30 trade on AMD, and everyone's wondering, I was in AMD all day, it followed through, I didn't make any money, and then you have this little nightmare up here that lured everybody in, right? You see the negative divergence. People say negative divergences don't work. I'm going to show you a chart if you guys want to see it on Saturday where we were able to pick off SMCI about, I think, 14, 15 points off the bottom. Off negative divergence, positive divergence, sorry, long day. So you have your little level up here and you can see that little nightmare that lured everybody in as they know how to read a technical chart. And then it broke, but people didn't want to get out. And now they're dealing with this nightmare with Apple after hours. And we'll talk about the Apple nightmare in a moment. But we have to talk about what happened. This is what happened. The follow through that we want it to be is not there. Let's talk about Amazon. Gaps open and then grinds higher. Where's the push? Let's look at Microsoft. Let's clean this up. This is the one that looks absolutely amazing to me. This chart looks amazing, and I just couldn't get out of my own way today. I just couldn't get anywhere today. That's telling. So the question is, do I really want to be buying swing trades here after what I just showed you on the S&P and where we're at on the 4 hour? Probably don't want to go goofy is where my head is with it. Now, you can do whatever you want. I'm just telling you how my mind works looking at these charts, and that's really where my head is. Doesn't mean that I'm right. Doesn't mean that these don't go up and that we get, super intervention overnight or we get world peace. I don't think we're getting world peace, but let's go through the 10-year. I have a sell signal that hit up here on one of the indicators. It's an indicator that's actually private. I can't post it there's a bunch of reasons why, but it's glaring here. And I'm not really adding a tremendous amount of value. I could just argue it this way, right? Let me do it this way so that you can say it. All right, so there's your level right in here. That's your 5%. You're bouncing off 5%. We'll call it that. 1, 2, 3. We've been up here a couple times over decades and we bounced off. I would say with what Japan did and what we saw today and the economic data that's coming out and the PMI number that we went over yesterday and the movement that we're seeing, that the market is telling you that at least in the short term, probably to the end of the year, that the bond market is done. We are here. And now there's a whole litany of reasons, and I will get into it on Saturday. Make sure you watch Saturday's video because it will tell you, in my opinion, how you should be looking at the sectors, who's going to benefit from this. Too much to get into tonight. It's more of our long form video that we do on Saturday, but you're going to have massive sector rotation based upon this. And if you know this, you can position yourself. I'll give you the easy one. This is something that we've been in since, I think, low 60s, right around here. and just rocking and rolling. Just go look at the Utes, 2 Utes, my cousin Vinny, anybody, Bueller. So if you take a look at this, I think that this has massive potential to continue to go. They are going to buy some of the interest rate sensitive stocks. So we're going to have to see if this flips and it continues to push, and we'll go from there. You can always clone these guys if you want and just see if they sit somewhere. It's kind of interesting, isn't it? Sits in here, pops out, comes right back in. All right. So now we have a pattern. Now we know what we should be looking for. How did XLU do? Okay. That did pretty well today. What's another interest rate sensitive area? XLRA. That's pretty interesting. How about XLF? It's fascinating how that works, isn't it? So all of a sudden, look at that, a positive divergence. Who knows? Who knew those things worked? They're notes from the Alpha Chasers community. Why have everybody? That is opening up again. Make sure you're on the wait list if you're interested in getting in. It will open. It'll be invitations started going out. So if you are on the list, look for it. We roll through them, and then when it gets filled, we shut it down again. By the end of next week, it'll be shut down for the year. Enrollment will just be closed. Just FYI, because I need to focus, and it's a very educational kind of room. So it's really like kind of, I have to just be on it, I guess is the best way that I can explain it. Anyway, so we're going to talk about these sectors. There's more to it than that, but I just want to tell you where you should start to focus on these sectors. You might want to start drilling into like KRE too. But that said, here's the thing that really bothered me about today, and people will say, well, why would that bother you? Okay, so first and foremost, my best trade of the day was this XLF. Now, I took this short, and one of the reasons I took this short, I actually thought they were going to squeeze them all day long. I really did. I came in with the premise, and this is what I always try to explain to people when we do the pre-market live, the public videos. I always try to get people to understand, I can think anything I want. I can have any premise I want, but I'm going to trade what happens. Okay, I have my model, I'm going to trade my model, and I'm going to make money. Watch this video.
ELF net sellers, look at that at VWAP. They really don't like that, do they? They're using that for liquidity. I'm really surprised by that because they have all those people trapped, and this is actually setting up to get even worse. See how you're breaking right here? I mean, this could gap fill. I'm going to short some. I'm short some ELF. I'm really surprised in that move, but I've got nothing here. There's nothing here. Well, I can feel any way I want about it, but I'm going to short some. I think if you crack, you're going to 94. You're looking at 102 for now. Come on, give me that long red bar down so I can pull some more out. Pulled a little out of this, guys. I didn't do options. I just did stock. I don't know how I got that average cost, but I'll take it. 135 is my cost. I can't believe it. That imploded, getting oversold here. So I got to be cognizant of that. Up $2. I pulled more out. You want to go to your home? Go to your home. You're pure on this. Pulled a lot of this out. So we're up $3 on that short. I'm staying short on the rest. I'm using that trailing stop. Again, what I'm using as a stop, I'm just going to use a close above the 9 EMA as a stop. So I mean, you can always have slippage, but right now it looks pretty good. Maybe I'll grind all the way down. See how it goes. There goes ELF. So you're cracking up almost $4, but I already pulled money out, so I'm not really doing anything else with it. Just sitting with it now. The ELF. ELF is negative. I'm now up $6 in that short. Let me just show you this. All right. So ELF is negative, and I'm up about, $7 in that short. So right there into that move on ELF, right there, I'm going to trim some right into that move. I'm not going to care that it's going to keep dropping. So we scaled out. We used this as the trailing stop, but that close where we just turned red right there. I'm going to pull a portion out. I'm up $7. So it is what it is. And that was my best trade of the day. For the rest of the ELF, walk through this. For the rest of this ELF trade, I'm just going to use down 10. Right now, that's my goal. If I close back over, if I get a 5-minute close back over the close, I'll probably get out of the rest of it. But right now, it's just a monster gainer for me. So we're up $8 in it, I think. Not really much to do. That's it, guys. If you need me, I am around.
Now, if you like watching that, just comment below. And I want to walk through the SMCI one, but I want to do it on Saturday if there's enough interest. I think watching the live videos are really important. What's really staggering is this. So the live stream goes for about the first 90 minutes of the day to hour, depending upon how busy we are. And then we had these other trades that we were putting on. You'll see there, this was SMCI. But what I want to point out is just this time frame right here that you can see. And there we are up 10, and we closed 100% of the trade when we were down here. And now if you take a look at that on ELF and you see where we're closing, we knew that we had support on this area. We didn't play games. We got out. Why did we get out here? Remember these words. We're going to put it on a t-shirt someday. Positive slippage. So I want to sell into it like you heard in that video. Okay, if that video is of interest, let me know. The one thing that's really important about the SMCI trade that I want to walk everybody through is my first attempt didn't work. It was an absolute abject disaster, and it did not work. By abject disaster, we lost a couple dollars. But The point that I'm getting at is it didn't work. This doji looked like it was going to hold. They pulled a little bit of the flim flam. We'll get into it. But there were glaring signs that when we were down here that this was going to hold. I mean, absolutely like flashing signs that this was going to hold. So that allowed us to put the trade on here. I'll walk through it just like that one. I have all the live footage of the first entry and then the re-entry. And I think it's important to learn, how do you re-enter? Like if something doesn't work, how do you re-enter? I think there's a really important lesson there. And it was a really cool trade. So I want to walk through it. If there's enough interest, just comment below. Thanks. Now, we talked about these little nightmares, how they're popping us over. We talked about the overbought. We're talking about all these levels. We've got it all figured out, right? Anyone have an answer for me on why SMCI went down with great earnings, great revenues, and guidance? Yeah, I don't have an answer. I would watch this very, very carefully. For me, I think this was just flushing people out. Now, we did not get above the 55, so we're going to have to watch that. That's a very important distinction. We should have gotten above that. But these names, they opened and they sat there. They opened and they couldn't even get over the opening price. And they played games with us all day. So this was one of my this was, I think, my worst trade of the day. And the way that they set people up here was beautiful. So you're looking at this 5 minute, you're looking at this consolidation, you break over, they make the higher high, look at this. They make the higher high on the breakout, and that was it. And then you just knew you had a problem. And they give you a long enough wick, so even if you're using the previous bar, now you have this wick. So you have that going for you. And then it just breaks, and then that was it. It was just toast. But that actually cost a couple dollars. Actually, that was the worst trade of the day. So if I look at that, that is absolutely maddening. But it's not even the buyers that they're getting. They're getting the people that are shorting too. And I know people say, oh, I don't short the bottom, I short the top. Okay. So, I actually, when you watch my live trades, they're actually reality. So I actually trade what I say I'm trading. And there's a really big distinction between that and Monday morning quarterback, right? That's why the live videos are so important, instead of me just pointing at something and saying, look how smart I am, right? That way you can actually see how it plays out. This is crazy when you start seeing this stuff. When you start taking out highs and taking out lows and you're not getting any way around it, you want to pay attention to this. This is telling you that they are looking to just basically chop you up. And when you see this, you want to stay out of the way. So the same thing with Apple previously. Same thing with Apple. And Apple right now is down after hours, but we saw this all day with, they're going to take us up, pulls it right back down, takes you up, gets close to this DTL, and now we're down about $5 after hours. Look, the quarter was decent. The guidance is not decent. Talking about weak sales going into the holiday season, it's not ideal. It's not really where you want to be. I don't know how this is going to act tomorrow, candidly, but here's your DTL, and you should definitely watch this tomorrow, as goes Apple, goes the market. And are you going to break that 200 or not? I don't really have an answer for you. I don't really know if we break it or not. I'd be shocked if we don't test it. You have a lot of people that bought this ahead of the quarter, 5 days out, right? 1, 2, 3, 4, 5. That's where you're supposed to start, 5 days out buying on earnings. But I don't know how this is going to go tomorrow. I know you should watch it. I know if this comes down and takes the market down hard, I'm going to be more interested in Microsoft than I am in Apple. Microsoft crushed, and that chart looks beautiful. Apple, this chart does not look beautiful, but there's other situations we have to talk about. We talked about ELF and how that blew up, even though they were really good earnings. Blow up mean we went flat. Like where's the squeeze there? There wasn't one. But even tonight, we should just go through this. So net down 4.5%. That's a good quarter. I mean, you beat your estimate by 61%. We're down 4%. Coin, this was kind of a little bit of a disaster, the way that they pitched the quarter, and the conference call didn't go very well. And you can see that you're down about 4%. I'd watch this fairly closely in here. Now, as far as other names, FTNT, complete utter implosion after hours, and that's something else that we should be watching. Square's up 15%. I don't know if that's going to hold or not. The company after hours started to sell down, and then after the initial sell down, let's pop that in right here so we can see it. After that initial sell down, we're trying to hold that 50 line, and then they said Bitcoin a couple times and it popped over. I'm not so sure this holds, candidly. I think you might see some downward pressure there, and we'll go from there. But overall, I think today was constructive. I think the most important thing to take away, and we'll get into this on Saturday, so make sure you watch Saturday's video, your most important takeaway is the 10-year treasury and what it's doing there. You need to watch this. You need to start understanding the connection between the 10-year treasury, the dollar, and how that's starting to look a little bit weaker in here. Those connections, how they affect certain sectors. That's why I want to do this on Saturday's video. But there's an actual massive shift going on here. Market is dynamic, guys. It's not static. You don't have $1.7 trillion behind you right now. You're going to have to learn how to read this stuff. It's really very important for people. Even today, I was fascinated that Tesla, you got right to that 200-day and you just completely rejected there. So that's another one that we have to watch. We have some economic data tomorrow. Powell really stole the show, and that's really where my focus is. That's it.